Welcome back to Grooving and Giving in Early Retirement. I'm Radhika. In my last two shorts, I talked about this. 1, how much money do you need to retire early? 2, where that money sits actually matters. So I'm starting this video with the assumption that you have sufficient amount of money to retire early. 2, you have sufficient amount of money in a non-retirement or a taxable account to sustain your living expenses from now till you turn 59 and a half. And in today's video, we are talking about investing wisely to slash your tax bill in that non-retirement account. Sometimes even paying 0% tax. How? By utilizing the long-term capital gains tax rate. Wow, that's a lot to say. Let's call it the special rates versus the ordinary income tax rates. Now, the special rates apply to special types of income, and two of the most common ones are qualified dividends or long-term capital gain dividend, whether it be from distributions or from the sales of long-term capital assets. Consider this. In 2026, if you are filing your tax return married filing jointly and your taxable income is less than $98,900, you will pay 0% tax on this special type of income, qualified dividend income and long-term capital gains. Now, if you are filing as a different category, like a single person or another filing category, those numbers are going to be different. So you say to me, I hear you, but I'm not going to meet those thresholds. So now what? If your taxable income is above that threshold, you will likely be in the 22% or 24% income tax bracket. Well, if you have special type of income, the qualified dividend income and the long-term capital gains, you will pay 15% on that kind of income. And that 15% range is very, very big. It is over $545,000 for single filers and over $613,000 for married filing jointly. So that's a big range. And if you had all of that as ordinary income, you'd be paying a whopping 35% tax. Yikes. So invest wisely, slash your tax bill so you get to keep more of that money in your non-retirement accounts. Recently, I celebrated my 5th early retirement anniversary. I retired early to pursue my passions, and one of them is my not-for-profit, A Childhood for Children. Our mission is to provide essential items to children in impoverished and underserved communities. But I don't do it alone. I have the support of a lot of people, and it is their support that inspires me. Together, we will make a difference.